Yeah, so I think on the idea of the target market, right? So any markets that has consumers that are digital savvy. So I think that's one, and that's key because most of the solutions are on the mobile phones, right? Second is of course the underbanked market. So even if you talk about emerging markets, all your underbanked consumers are actually a very good consumer pool also for the banks itself. And of course, the third one is that in areas or in countries whereby the traditional bank services are largely more cumbersome and there's a lot of barriers that could be disrupted essentially. I think these three factors would be areas that are good for any digital bank to penetrate and kind of like disrupt and acquire the consumers over there, right? So I think on that note itself, if you look at how neobanks function and if they are actually a competition to traditional banks, so yes and no. And of course, with that being said, regulations is still a blocker for most digital banks, at least in the ASEAN region, like for example in Singapore, right? Like it's not easy to get a banking license, and so that alone limits a lot of stuff that a neobank could do, right? But competition is inevitable ultimately, right? And if we look at emerging markets, ultimately it has already kind of like caught up with like mature markets when you look at digital banking, right? You just look at the growth of emerging markets adopting these solutions from like 2017 all the way until 2021, like the growth is huge, right? And of course, we cannot deny that the pandemic was a catalyst in this digital transformation. So I think that's one, right? And based on just that alone, naturally consumers would then want to explore more options as they are getting more and more used to like digital solutions, right? So I think that it's by default a natural competition itself. I think another thing is also when it comes to time, right? So I think that's something we all tend to forget. Your traditional banks, they open 8 to 5 or 9 to 6. Your digital banks are basically 24/7, right? I can basically access the app itself. I can send money at like 3 a.m. I can do a potentially an FX transfer within the app itself at like 5 a.m. for example. And there's just so much things can do at times whereby traditional banks are closed, right? But that being said, of course, regulations are still a blocker as we mentioned earlier on. And I think the last part on how it's competition, and I think this would be a very key point, is that it's also in a way tied to our smartphones, right, and how smartphones evolve. Ultimately, as our smartphones evolve, there'll be more and more digital solutions across like lifestyle, like finance and whatsoever, being created to be on your phone, right, in form of the app itself. And what happens is consumers then get a lot of, or what I would say, an increased expectations of what kind of digital solutions are offered to them, for them to even have it on their phone screen, right? So just for example, if let's say I'm very used to a telco app, and I use the telco app to maybe like pay my bills through app, and even if I'm traveling overseas, I could kind of like buy an auto roam trade, for example, and as consumers get used to the convenience of services like that, they would expect it private industry, right? And banking is not spared either, right? So when it comes to having a banking app, a consumer will want to be able to do what he or she can do in the physical space on the online space as well. And the fintech players are already offering that, right? And so if is it a competition? Yes and no. But I think in the long term, it's a definite strong yes, due to the fact that it's only a matter of time where either traditional banks, they innovate to really play the full suite of solutions that your neobanks now play, or they even just collaborate and land a banking license to another player, and then they kind of like collaborate and capture the markets together. I think the key point to be answered here is ultimately what elevates and enables the consumer, right? So I think when it comes to creating a solution of sorts, whether it's a digital bank or even a traditional bank, it's not so much which entity has global experience and whatsoever, because ultimately it's just human resource that are the talents creating these solutions, right? But I think the key question to be answered here is what kind of approach are we actually taking, whether it's on the neobank or on the traditional bank, what kind of approach are we taking to develop that solution, right? Is it a product-centric solution, or is it a consumer-centric solution? And then I think there's also the question to answer whereby if everybody is doing, for example, service A, B, and C, am I going to come in to do exactly service A, B, and C as well? Because I just don't want to lose out to competitor, right? So ultimately, if you are doing that, then it's just a Me Too product. There's not much real value add essentially, right? And customers know that, right? And customers ultimately go to wherever there's the better experience, whichever is less buggy and stuff like that, or rather being able to cater to their needs. So I think that's very key, right? We first need to develop a banking solution that is consumer-centric approach. And then once we zoom in down to that, whether it's targeting the mass market, the underbanked market, or maybe even just focusing on the high net worth market, for example, we then tear down the barriers layer by layer. So I think that's very key, right? And why I say this is because we really need to know, like, whether on the digital bank or on the traditional bank side, who our consumers are and how are they kind of like evolving in their lives, right? Like we cannot deny the fact that our lives are very intertwined with our smartphones, right? If we need to communicate with someone, we go to our smartphone, we open up a Line, WeChat, WhatsApp, whatsoever to communicate with whoever. If we need to pay bills, same, we go to our smartphone. We need to open up emails, we go to our smartphone. Almost everything is on the smartphone already, right? And if we are so intertwined with our smartphone, and naturally people would want to find integrated services, whereby can I, like, for example, like do shopping and then pay it straight away, right? And that's where all the API integration comes in, right? So I think that's an area that needs to be considered, right? Expectations would increase. So it's not just the battle between, like, you talk about traditional bank versus digital bank, but it's also essentially banking as industry alone, as per other industry in comparison to how the wider market is growing essentially, right? Like what I mentioned in the earlier on, I used the example of a telco whereby you can purchase extra data through the app. You can even potentially make your home a smart home through the app by ordering like the smart home packages and getting someone to come in and fix everything can be done through the app, right? And these demands of these consumers, these increasing demands of them would just force every player, no matter what industry you're from, to change nonetheless. So I think the case in point is do we want to lag behind consumers and only implement when it's being asked or demanded, or as we start to create the solutions, whether it's on the digital bank point of view or on traditional bank point of view, do we want to then create products and solutions and services that we know would kind of already be asked for, right? So I think that's where we start to see the difference, whereby we have so many fintech players, like just in a country alone, let alone the ASEAN region, right? And when, as a consumer, when we look at all these solutions, there are only a handful that stood out, and the rest of them are those that like probably we have not heard of, right? There's just so many Me Too products out there, but if you look at those that really are created to solve a certain need with a very strong unique selling point, those are the players that essentially create the solutions before it's even being asked, because it's already kind of like predicted or forecasted based on how consumer lives are changing. So I think that is probably the point of view that I would actually like take for to better serve the market. So I think the answer to that is yes and no. Like, it would be a major threat to companies, but it also will not be a major threat to companies. Depends on how it turn out, right? So firstly, on yes itself, like, why do I say yes? It's because if you look at the mobile app, which most digital banks are created on right now, to sit on your iPad or even your smartphone, right? The app is a free play. What I mean by that is that I can create the app to just serve everything financial, or I can be a little bit innovative and I can include like products like travel, even down to like shopping, for example. And those are stuff I could do as a new digital bank player, right? I could include a section called rewards, like what Revolut has, and I can integrate like various like merchants from various categories, whether it's like fashion, whether it's like F&B, for example, even gifting, into the app itself. And what happens, I can do a tie-up with them whereby I can give like a cashback or rewards of some sorts and have my bank consumers transact within the app itself, right? And what this means is, instead of a banking app doing everything purely banking, they are able to procure other services or products that is kind of intertwined with money in the form of payments through the app as well, right? What this means is essentially fintech players can actually blur the lines between what a bank get to be and kind of have it in like a lifestyle app essentially, right? Like you can mix like travel, you can mix like shopping and everything, even bookings, paying your utility bills, everything all in one place itself, whereby it becomes like something like a super app, right? So by that, yes, it definitely is a major threat because it's not that easy for a traditional bank to do the same thing because of all the regulations and also like the legacy brand that you have essentially. So that's the benefit, right? Of being a digital bank. You get to kind of create your own rules and integrate as much services that you want that you feel is relevant to your consumers or would kind of benefit your consumers, right? But also it will not be a major threat to the companies as yet, because for as long as the regulations are a blocker for players to get their banking license, and also I think when it comes to like consumer perception, there's always this notion of like security, trust, and that comes from legacy, right? Like for example, okay, this is a new fintech player. Yes, the services are amazing, it's awesome, but what happens if they close down, right? Like, what happens to my money inside? In some markets, or in most markets without the banking license yet, how do I deposit? If I deposit money in, where do I actually draw the money, for example? So I think all these questions are still a question mark, but it's just a matter of time before more and more like people start to kind of adopt these digital banking solutions, and then that's where it becomes even more serious in the competition already. Revolut has gone beyond just competing on digital payments or even the likes of cross-border payments, right? So if you look at the full suite of services that Revolut has, it's not just a FX payment product. That's what it started out as in 2015. But essentially, in line to this question on how could you play extend beyond services beyond digital payments, I'll use Revolut as an example, right? I started in 2015 as a FX payment product, right? So what this means is, if let's say you live in Singapore, you live in UK, or you live in like Thailand, for example, and you are heading to another country, with the Revolut app, you could deposit money into the app itself in your home currency, transfer money inside the currency wallet of your choice. So like for example, in Singapore, and I'm going to head over to Thailand, I would deposit Singapore dollars into my Singapore wallet. I will open up a Thai wallet within the app itself, which is just a click of the button, and then I'll transfer Singapore dollars to Thai baht. And then what happens is, if let's say I change 1,000 Sing dollars into Thai baht, that exchange would take place within the app itself. And then right now in my Thai baht wallet, I will have the converted amount of $1,000 equivalent of Singapore dollars of Thai baht, basically. So that's a FX wallet, and that's what initially started out with. But as it scales, it realizes that anything that money touches, the service could be integrated into the app. So long story short, across the next 5-7 years, right now we have this product called Stays, right? Whereby it's similar to the likes of like Expedia, but just that inside the app itself, apart from just all your digital payments, loans and whatsoever, as you go to a drop-down feature, you click on Stays, you can essentially book like whether it's hotels, you can book like lodges, like the likes of like Airbnb homestays within the app itself, right? And each vendor that you book from would have a discount to it in the form of like cashback or maybe just a straight off discount, right? And that's just one example on how that could be integrated into financial services app, because ultimately it's wherever there's most people, you want to be at, right? So for a lodging or hotel player who want to be in a finance app like Revolut, boasting like almost 20 million user base itself, it makes sense for them because why? With this kind of partnership and collaboration, they are able to reach out to 20 million customers, right? Versus putting their services or their ads, for example, onto a DSP or buying like ads, for example, and you're paying like X amount of dollars to get X amount of impressions and then having the funnel go down. So if you look at it on a perspective, where can I get the most eyeballs, right? And if you look at a finance app, if the finance layer is the key ones in the market, you know that on a daily basis, they have a huge amount of active user base, right? And it makes sense to then partner with it, is relevant. So the idea of like having Stays coming into the app itself is one example of going beyond digital payments, right? We even have the idea of like remittance, right? Remittance in money transfer, and that's where we kind of capture the underbanked market. There's also like insurance, like we have expanded beyond just like the normal insurance. We have even like pet insurance, and even down to depending on whether if the company has various card plans, right? Like Revolut, we have different card tierings of plans. And one of the tier, which is the metal tier, allows people to, the moment they book like a flight with the Revolut card, they get free insurance. And not only that, you get to enjoy airport lounge services at a huge discount rate. Right? So there's multiple things that you can go into. And Revolut has gone into like shopping, has gone into like rewards, has gone into like cryptocurrency, has gone into hotels and stuff like that, even down to airport lounges and whatnot. So there's many ways to expand services beyond digital payments, but I think ultimately it's what the app or what the business aims to acquire, right? Revolut, very simply put, we want to acquire mass market, and ultimately we're the one app for everything money, right? Everything money touches. If it's relevant to be in the app and if there's a value add, we want to be at. Right? And any other player could do the same thing as well. If it's relevant to what their business wants to achieve, and if it's relevant to their consumers, right? So I think that's that. And it brings me back to the answer that I mentioned in the earlier questions. It all starts off with a customer-centric approach, right? First understanding who are our target market, what do they actually need, and what kind of solutions that we create would kind of elevate how they are doing banking now, how they are transacting now, and how would it be a huge value add to whether it's like a convenience factor or another factor that you might want to disrupt, basically. So if it's a for-profit business, right, ultimately, and what this means is no stones will be left unturned. Whether it's the bank market or unbanked market, there's business to be made in both segments, right? And it's just a matter of when, if the market conditions are right, and if the customer needs are existing, right? So I think that's key. So if you look at the unbanked market, largely emerging, and if you look at trends in terms of employment, like what do we actually see, right? We see a lot of like foreign laborers overseas, and a huge feature that they need it's remittance, right? So I think when it comes to the idea of like remittance, that's a huge penetration for the underbanked market for most of the fintech players, basically, right? And by that, if you look at the likes of like TransferWise, Dash, Utrip, Revolut, remittance is a very good way for these folks to actually like save money through the interbank rates. And if let's say, for example, they use these products to transfer money or to remit money, essentially, their family members or whoever that they remit the money to could also kind of enjoy the interbank rate by downloading the app, receiving the money through that rather than to the bank account itself, to bypass and not pay like the standard fees that you usually pay, right? And what happens is it becomes a natural organic adoption of these solutions across these risk markets already. And the moment it starts to be there, there's so many things that you can create from the underbanked markets, right? Like for example, working with like direct consumer merchants, the likes of like the mama shops, the push carts, for example, to have just a normal phone that could kind of have the app sit on it, and then for them to kind of do business through like NFC, or even for them to even just withdraw money through these players, for example, right? You don't need an ATM to withdraw money, essentially. So there are many ways of innovation that you can use to create value-adding services for the underbanked markets, and the likes of like just like withdrawal to the D2C merchants. It's just one example. And these are some examples that have really been done by some players in the market already, right? Like Indonesia is a good example that championing the likes of the underbanked markets. So yeah, so I think there's huge potential on the underbanked markets, basically. And if let's say you are asking players like Revolut looking at this market, we have huge plans for these markets, basically. I think there's no right or wrong answer to how many players can a regional market accommodate, right? As long as consumer needs are always evolving, it means that there's always room to disrupt, right? And I could have like 10 companies or even like 100 companies offering the same services, and then they could just compete purely based on brand, or purely based on who does a better customer acquisition funnel, or who does a better customer service and whatnot, right? ultimately you can have like these 100 players offering the same thing, but based on a pool of consumers and what they value, there's always a market for every of these players, even though if they offer the exact same thing, right? Like company A to Z, company A could be very strong customer service, and a segment of a market values customer service more than speed, and then they will stick to company A. Company B offering the exact same service and product as company A, but their customer service maybe it's a 50% of company A, but speed it's way above off the charts, right? And it's super fast. And then you have another segment of customer that values speed. So essentially, there's a customer segment for every market on the discussion basis that everything is equal. So there will always be room for competition, right? It's just whether is it huge enough to make business sense to actually penetrate it. But I think the larger question, which is what we are trying to answer here, it's how much then it's too much, right? And I think the answer is there will always be room for more and more players. For as long as consumer needs are evolving, right? There will always be new innovations coming in, maybe not impacted directly by banking, could be impacted by a transformation in mobile phones, for example. Could be maybe a transformation or an innovation play in smart homes, for example, right? Who knows how smart homes might turn out to be? And then if payments could integrate into smart homes, whereby, for example, you just like swipe your phone across like some device and then your bills get paid automatically. Like there's maybe or another player kind of decentralize the way energy is being done, and then you could kind of pay for energy bills not like the traditional way of paying it, but you can kind of apply for energy bills like the way fintech kind of decentralizes finance, right? And that could happen as well. And then you might see the finance apps all changing again, and everything around it change, right? So there will always be room for more. But the key thing here is for all these players that come into the market, having one very strong positioning. I think ultimately it's about how is that positioning sustainable for growth and innovation, right? So what this is as things change, it does not kind of disrupt what they stand for, because that's where companies will lose out, right? Like for example, if I'm a company that is well known for coffee and toast, and suddenly I go into banking, customers would not trust me because okay, that's an F&B player. Why is he going to banking, right? Brand is a huge factor as well. So what this means is when you enter the market, that positioning needs to be flexible or adaptable enough to cater to innovations and growth. So that's one. And number two, as long as we are adopting a customer-centric approach, always catering to the what's next, catering to what they need, and we know our target segment very clearly, there will always be room for more players to value add into the market.